Good morning, good morning, good morning, everyone. I'm going to ask those of you who have joined us to turn off your mics. We're getting a feedback, and we're going to invite you at the appropriate time to turn on either your camera and or your mic at the same time, at the time when you're asked to speak. Welcome everyone to the Bank of Jamaica's third quarterly monetary press conference for 2022. These press conferences are hosted to update the general public via the press on matters concerning the work and function of the bank, and in particular about inflation. I want to personally thank members of the press who are here with us, albeit virtually, and for working to ensure that we provide relevant and salient information to the general public. This press conference is being conducted on a hybrid format with Governor Biles and his team here at the Bank of Jamaica, while members of the press are in their respective offices/homes, while we live stream on our Facebook and our YouTube platforms to a wider viewing audience. Governor Biles will open us up this morning, and he will be supported by Senior Deputy Governor Dr. Wayne Robinson, Robert Stennett, who is in virtual land. Robert is our Deputy Governor with responsibility for research and economic programming and financial stability. He will also have with him former Deputy Governor Maureen Sims, and of course, if others are asked or need to comment, Governor Biles will indicate accordingly. We get started this morning with Governor Biles making the presentation on the monetary policy statement for ending August 2022. Governor Biles, over to you.
Good morning, ladies and gentlemen, and welcome to our quarterly monetary policy report. Good morning, ladies and gentlemen, and welcome to our quarterly monetary policy report press conference. Bank of Jamaica is encouraged by the direction of the last three CPI reports. Having peaked in April 2022 at 11.8%, inflation at May was 10.9%, followed by another 10.9% in June and 10.2% in July. Decline in international commodity prices, relative stability in the exchange rate, tighter liquidity management by the Bank of Jamaica, and higher rates have allowed for this trend. Notwithstanding this good direction, the bank believes these conditions have not sufficiently solidified to ensure that inflation is sustainably on a downward path. There remains some significant risk of reversal. The fragile geopolitical situation with Russia and Ukraine and Europe in general, with its knock-on commodity price risk, cannot be ignored. The reported labor shortages in selected sectors of the economy and pressures from our recent inflation experiences carry the potential for future wage adjustments that could be inflationary. Finally, high inflation in the United States and in other trading partners has prompted a program of faster monetary adjustment, which could cause capital outflows from Jamaica and cause exchange rate depreciation if domestic monetary policy is not properly aligned. These are some of the factors the bank's Monetary Policy Committee considered when it met on the 16th and 17th of August 2022 and voted to increase the policy rate by a further 50 basis points to 6% effective today, 19th of August 2022. The committee also decided to continue pursuing other measures to contain Jamaican dollar liquidity expansion and to maintain relative stability in the foreign exchange market. The MPC noted that the bank's strong international reserves reinforces its ability to support the foreign exchange market as needed. This current decision has resulted in a cumulative increase in the policy rate of 550 basis points since October 2021 and has taken the policy rate to a level that the committee considers appropriate. If incoming data on inflation continues to track downwards and the monetary adjustments in the United States in particular are as expected, the MPC agreed that it could pause its policy rate increases. Complementing the policy rate increases, the bank adjusted the net open position limits of deposit-taking institutions and sold approximately US $678 million to the foreign exchange market since October of last year, approximately 30% more than the amount sold over the corresponding period prior to July of last year. The bank, for the same period of this year, up to since October 21, bought 1.9 billion principally through the surrender system. So the bank not only sold into the market, it bought from the market. These policy actions contributed to the maintenance of stability in the exchange rate since the start of November of last year. Without these actions, imported inflation and hence the final prices faced by consumers would have been much higher. The bank expects that these measures will continue to cause interest rates on deposits and loans to rise further, making savings in Jamaican dollars more attractive relative to foreign currency assets and borrowing in Jamaican dollars more expensive. In turn, these measures will help to reduce the demand for foreign currency, leading to continued stability in the exchange rate. Let me now go into more details about recent developments in inflation and the outlook for it. The Statistical Institute of Jamaica announced on Monday that the inflation rate for the 12 months leading up to July 2022 was 10.2%. Over the remainder of this year, the bank forecasts inflation to continue to moderate, consistent with consensus forecasts for a fall in commodity prices. This means that, assuming no additional shocks, the public should see annual inflation rates trend towards 9% for the remainder of 2022. Inflation should start to decline from these levels in early 2023 and fall within the 4 to 6% range by December of 23, as long as tensions between Russia and Ukraine do not escalate and inflation among Jamaica's trading partners continues to fall. The risks to the inflation forecasts are assessed to be balanced, which means that actual inflation could very well be in line with what we have just forecasted. The factors that could cause higher inflation include further disruptions in international supply chains, higher than anticipated pass-through of imported inflation to domestic inflation, and a reversal in the trends in commodity prices. The rebound in the domestic economy and the additional demand for labor that this brings may contribute to further upward movements in wages and hence prices. On the downside, weaker than expected global growth could cause even greater softening of international commodity prices. Looking at the Jamaican economy, we can say that the economy continues to perform creditably. There are signs that the economy expanded strongly in the June 22 quarter, and so far the same in the September 22 quarter. The labor market has also continued its exceptional performance. At April 2022, the unemployment rate fell to a historic low of 6%. For the fiscal year 2022-23, the bank projects real GDP growth in a range of 2.5 to 4.5% and in a range of 1 to 3% for the financial year 23-24. The bank expects that GDP growth will continue to be driven by the services industry, particularly tourism, which has been recovering at an even faster rate than anticipated. There has also been some buoyancy in the agricultural sector, which is expected to continue as the tourism sector recovers and weather conditions remain favorable. The forecasted growth also reflects the recent resumption of production at the Jamalco alumina plant. The risks to the growth forecasts are skewed to the downside, however, suggesting the possibility of slower growth. Growth in tourist arrivals and related activities could be lower than projected given strong headwinds to global growth, tighter financial conditions, and ongoing geopolitical tensions. More severe weather in the context of climate change also poses a downside risk to GDP growth. Finally, there is a risk that domestic consumption could be adversely affected by the high, albeit falling, domestic inflation. Turn for a moment to a couple other developments. The foreign exchange market has remained relatively stable, reflecting in part the actions taken by the bank in response to the higher than targeted inflation. Notwithstanding these actions, at the 17th of August 2022, Jamaica's gross international reserves remained substantial, amounting to approximately US $4.3 billion. The bank projects that the gross reserves will continue to remain adequate in the medium term. The financial system also remains resilient. The deposit-taking institutions' balance sheets have remained adequately capitalized and in compliance with prudent liquidity standards. The quality of the deposit-taking institutions' loan portfolios remains stable, with a ratio of non-performing loans to gross loans marginally better than that recorded a year ago. Private sector credit provided by the deposit-taking institutions has been growing, but at a slower pace, reflecting the lagged effect of the pandemic and the effect of higher interest rates on credit demand, particularly from businesses. Let me conclude, ladies and gentlemen. I wish to reaffirm the Bank of Jamaica's dedication to achieving its primary mandate of preserving price stability. The bank will continue to closely monitor the global and domestic economic environment in this period of high uncertainty and is prepared to pause its monetary policy tightening if incoming.
Thank you very much, Governor Biles, for that comprehensive report. Before we open up and invite you to ask the questions that we must answer, just to give you a little some housekeeping, how we're gonna perform as we go forward. We're gonna ask that you raise your electronic hand if you so indicate, if you so wish to ask a question. Kindly raise your electronic hand, or if you choose, you may send us your question via this platform using the chat feature. Or if you prefer to open your mic and just indicate to us, we will also acknowledge you and ask that you go right ahead. All right, it's time for us now to answer your questions. And the first question, the first hand I see raised is Huntley. Huntley, good morning to you, sir. The floor is yours.
Good morning. Thank you. Good morning. Morning, Governor.
Morning, Huntley.
Well, just to start out with two clarifications. I note the language of the MPC summary spoke to tentative, the rate at 6% being tentatively appropriate. Your language in your presentation this morning spoke to the rate being appropriate. Does the summary language speak to different points of view on the Monetary Policy Committee about where the rate should be at this point and what is appropriate at this point? That's the first point of clarification. Secondly, the language of the summary also speaks to the MPC being prepared to pause its monetary policy tightening. Does this mean just possibly pausing the increases in rates, or also your market intervention activities?
Thank you, Huntley. No, there's no division in the committee. We all agree that the rate of 6% is appropriate. I don't know, I wouldn't interpret the difference between the two things that you said to mean there's a division between us. It's the same thing. The rate is appropriate. Pause means that we have felt that if the incoming data continues to be positive in a sense that indicates that commodity prices continue on their downward trend, exchange rate is stable, the Fed in particular, but other trading partners, central banks, monetary policy is not any more aggressive than they have stated it will be, then we expect to be able to say no further increases in our policy rate. So that's what pause means. But it depends on the incoming data, Huntley. So we leave that little crack open in the door in the event that some of the information turns out to be a little more adverse than we'd like it to be.
Thank you. I will leave it at that. I have possibly two others, but I'll wait for the go around.
Hello?
Yes. Yes. Could you please identify yourself and go proceed with the question?
Al Edwards.
Oh, Al. Hi, Al. Please go ahead.
Good morning. Good morning, Governor.
Morning, Al.
Governor, I'd say over the better part of the year, you've come in for some criticism with your monetary policy. There are those, and you would know in the media, private sector, said it was a tad aggressive. But when you look globally, particularly what's happening in the UK, with people saying Bailey was too slow to respond, Jerome Powell in the US, you see what's happening in Sri Lanka, see what's happening in Turkey. Do you feel justified in your approach and the way you went about applying the policy?
Thank you for the question, Al. Absolutely justified. We started early, as you say, October of last year. Remember, our policy rate at that time was very, very pro-growth, very accommodative. It was 0.5%. So we had a long distance to go once we saw inflation on the rise and likely to be at a high level for a while. We had a long way to go to get to where we are today, where, as we say, we feel fairly comfortable. And so we had to be aggressive and we had to start early. So yes, we feel quite vindicated by it. And I must say, you know, people, I think generally Jamaicans appreciate that the exchange rate has been stable over the last 10 months in particular. What I don't think they always appreciate is that higher interest rates have been crucial in keeping that exchange rate pretty stable. High interest rate and a tight liquidity policy that we have run at Bank of Jamaica. So we have mopped up liquidity. We don't have Jamaican dollars sloshing around in the market. We mop it up, take it back into the bank. And we have raised interest rates so that people will find investing in Jamaican dollar securities is as attractive as buying a foreign asset. And in that way, keeping people out of the foreign exchange market and making the market stabilize. So interest rates have been really important in keeping that exchange rate stable and therefore keeping price increases to as moderate a level as possible.
Thank you.
Thank you for that question. Dashan Hendricks, I see your hand up. Please go ahead, sir.
All right, thanks. And forgive me if I repeat a question because I know Huntley asked about the level, but my computer froze, so I had to switch. So I don't know if the governor answered it. But governor, in the notes to the MPC decision yesterday, the bank highlighted that it is at the near the appropriate level. I'm probably repeating Huntley's question or going a little further to add. But you will act to pause if are based on the incoming data. What kind of incoming data would you like to see for the MPC to say, okay, this is a level we can pause our interest rate increases at? And secondly, one more thing, how efficient is our money transmission mechanism in pushing through or using, well, in the impact of these interest rate hikes, tamping down inflation? Because last year, when we started increasing interest rates, the bank note said that we were expecting to have inflation back within the target range by the second half of this year, but now it's gone over to until December next year.
Dashan, thank you. Let me say, what are some of the signs that we're looking for? Very much some of the stuff that we have seen happen in the last 2 to 3 months. That is that commodity prices, wheat, for example, corn, soya, which makes up our bread or animal feed, which comes through to us in our chicken prices, that those continue to decline, that oil continues to decline. Those are important commodities that if the trend is to continue declining, would have a very favorable impact on our decision making. Also, if the Fed and the UK Central Bank actually executed on their monetary policy in the way they have stated they will, and not be more aggressive, then we would have taken that into account and we will see that as a positive sign too. So I would say that those are amongst the more important of the signals that we would look for to say that we feel more confident that the trend is solidifying and we can pause. The transmission system, yes, it is not as we would like it to be. It's not as it is in the United States. We have 11 deposit-taking institutions, but the truth is that approximately 60 to 70% of the business is done by 2. So the competitiveness amongst them is not as intense as we would like it to be, and therefore market forces don't have the impact that we would like it to have. But we have seen that there have been changes. Some savings rates have moved, some loan rates have moved. So it is having an effect, but it is in a delayed manner. It is not as prompt as we would like it to be. That we said, inflation would have begun to decline in the second half of this year. Well, we didn't foresee the Russia-Ukraine war. I don't think many people did. And that has, you probably agree, a very powerful impact on inflation. It's delayed and pushed out the decline of inflation for 6 months to a year almost. In fact, yes, I'd say 6 months to a year. So I hope I've answered your question, Dashan.
One.
Sorry, go ahead, Dashan. Go ahead.
Just one aspect which I probably wasn't as clear on the appropriate level and things come in. Is there is there a target inflation when if Statin comes out and say, since with the forecast is for inflation to come within the target range by late next year, if this year Statin puts out some figures that is in some range, we know it's not going to be within the target range, 4 to 6%, where the bank could say, okay, this interest rate, this inflation, sorry, that Statin has put out for this month is an inflation rate which we could sit and say, let's pause right now.
Well, it's not a one signal that we're looking for, Dashan. We're looking for several, as I've tried to indicate. So a lot of our inflation, as we know, is driven by international commodity prices. And that's why I say we're looking to the price of oil, wheat, corn, soya. So that is almost like looking ahead to see what is coming to Jamaica. It's kind of looking at what the weather is tomorrow, though we are sitting here today. So yes, we are looking for those trends to solidify, that they continue downward and translate into CPI numbers here in Jamaica that are also on a downward trend. Of course, there are events in Jamaica that can impact our CPI separate from international commodity prices. But we have our own engine of inflation right here too. And I mentioned, for example, that if the continued labor shortage results in wages rising high, it could have an impact on inflation. Also, sometimes we give taxi fare increases, bus fare increases, electricity increases, water increases. Those too can have an effect on domestic CPI numbers, quite apart from international commodity prices.
Thank you for that question and for the response, Governor. I want to pause just to recognize those who are joining us for the first time and those who are not necessarily regular visitors. We recognize Bloomberg. Bloomberg is with us this morning. Thank you so much for joining us, Jim. We also want to say a special welcome to other media houses across Jamaica. There's so many of us. In particular, I want to say good morning to IRA FM. Thank you very much. Is there another question? Hundley, is your hand up? Is this from the last time?
Yeah, my hand is still up because I
Okay, please go ahead. Go ahead.
Thank you. There is arguably right now a recession of sorts in the U.S. housing market. Is the BOJ concerned that rates at 6% could trigger a similar slowdown in the housing and real estate market in Jamaica, in which several financial institutions are heavily invested, causing some level of contagion, fallout in the sector? If you could answer that, I will go to the next question. Thank you.
Yeah, well, yes, I would think that if rates continue to be increased and even beyond the 6%, it could have an impact on our housing market here. We don't have a totally market-driven mortgage market in the sense that the National Housing Trust plays a major role, and they are not necessarily driven by market impulses. But I don't also think, Huntley, that the DTIs are as heavily invested in the mortgage business as you might think. But nonetheless, it is a risk. I think it is something that we would watch very carefully. Maybe I should invite my Senior Deputy Governor, Dr. Robinson, to comment on that. He's closer to this than I.
Thanks, Governor. Good morning, everyone. I think the key thing is that we do recognize that there is a risk, but we don't think that certainly at these levels of the interest rates, it would push certainly the construction and the housing sector into a quote-unquote recession. I mean, even when we look at the trends in mortgage credit up to, I think it was June, mortgage credit is still growing pretty strongly. So yes, there is a risk and we do expect to see some slowdown, but at this point, we don't think that it will drive the sector into a recession. There is going to be some slowdown nonetheless.
Thank you. Another question. The government is under pressure over wages and calls for greater stimulus spending, for some more welfare spending, and so on. Is there any collaboration between BOJ or room for collaboration between BOJ and, say, the Ministry of Finance that has mandate for fiscal policy? I know BOJ's mandate is monetary policy, but there would need to be balance on the fiscal side and the monetary policy side to have the desired effect of effectively controlling inflation. Can you comment on that, Governor? Is there that ongoing collaboration, and is there room for it?
I wouldn't say ongoing collaboration, but we know what the fiscal policy of the government is, and the government knows of what our primary mandate is, and we are both very respectful of these two objectives. Generally speaking, on the fiscal side, it is, in trying to reduce debt, it is quite contractory. That's the impact that it has, because it's paying down debt. It's not spending all the tax dollars. So generally speaking, in pursuing their primary objective of getting that debt to GDP number down, they run primary surpluses, which has the impact of taking liquidity out of the market, for which BOJ is happy. And similarly, in executing our policies, we do know that raising rates has an impact on their fiscal expenses, but at the same time, a stable exchange rate has even greater beneficial impact for them. So whilst there is no day-to-day, week-to-week, month-to-month collaboration, generally each are respectful of the other's mandate and policies.
Thank you, Governor. Would I be permitted a final question?
Please go ahead.
I go back to the MPC summary. It says these measures are intended to constrain aggregate demand in the economy and so on, which we understand. But it further says, and consequently to limit the ability of businesses to pass on the price increases to consumers. I'm not sure that necessarily holds historically in our economy. Can you explain, Governor, or someone else, how the BOJ expects that the monetary policy measures will limit the ability of businesses to pass on price increases to consumers?
Dr. Robinson has volunteered to answer.
Okay, thanks for that question, Huntley. All right, first of all, we chose our words very carefully when we said limit. So we're not saying that we're going to prevent any pass on. Our policies will restrain the ability. There are two channels through which our monetary policy typically will affect inflation. One is the exchange rate channel, and that is the most immediate and most pervasive channel, and we are seeing that impact now. The other is in terms of affecting spending in the economy, whether it's spending by consumers or it is investments by businesses. Now, if consumers are limited in how they can spend, a business person will have to think twice about how much they can pass on. Now, you're correct in terms of your observation that this channel tends to be the weaker channel, but it does work over time. The fact is, if demand is constrained, the businesses cannot simply pass on as much price increases that they would want. Now, it's important to note that we have tried to calibrate our adjustments such that whilst we are restraining demand, we do not have a significant adverse impact on overall economic activity.
Thanks for that, Dr. Rob. The next question, Dashawn, I see your hand up. Kindly go ahead, sir.
All right, sorry. Governor, in the MPC in June, and I'm looking at the minutes from the MPC in June. A discussion was had on the project on deposit account and credit portability, with the central bank expressing the need for urgency to address structural issues in the Jamaican financial and monetary transmission mechanism. Now, how far are we away from what, first and foremost, what structural issues does the central bank believe needs to be addressed for us to have to do this credit portability and the project on deposit account? And also, answer that and then I'll ask you something else.
Okay, so Dasha, remember, I think this is what we said. Each deposit-taking institution is required to do their due diligence on every customer. And their correspondent bank, whether United States, United Kingdom, wherever, depends on them to make sure that there are no money launderers or terrorist financiers that are customers of theirs and doing transactions. So every bank has that responsibility, and they can't pass that off onto anyone else. They have to be satisfied themselves. So it means that if we are trying to create portability, we'd have to have a central depository in which all banks have confidence in the information on the customers in there. Although you may think it is a little crazy, if I am a customer of, say, a big international bank and I want to open an account with a domestic bank, a Jamaican bank, that Jamaican bank has the right and, in fact, the responsibility to do the due diligence on me and not accept that of the big international bank. And that's why having a central depository of credible, acceptable information on customers is important. Now, putting that together is not an easy task. It means that I have to get all of the DTIs to come together and agree what are the terms of reference, what was the outcome that would make everyone feel comfortable with the quality of the data in that depository. Very importantly, too, when we have a national identification system, that will go a long way to satisfying all of the DTIs that the person who is in front of them is actually the person that they say they are. And that is a big part of the problem that we currently have. So once we get a national identification system done, and we get the banks to hammer out amongst themselves and the central bank what are the terms of reference of the central depository approach, we will begin to practically implement it.
Hello?
Thank you, Governor. Is that yes,
Hello?
yes, Dashan. Please just let us allow Dashan to ask the follow-up question. Dashan?
Yeah, I'm presuming, Governor, from what you have said, there is no timeline at the moment on creating the central depository, right?
No, to be honest, I don't have a timeline, but I am absolutely committed to it. We have discussed it in management committee. It's part of our strategic plans for the next year or 18 months. I expect that the national identification system will begin implementation shortly. So although we don't have a timeline, we are very invigorated by the need to get it going and are going to hit the ground running. I'm very happy that you're here emphasizing this point, Dashan, because Karen Burrell, who is sitting here for Dr. G.D. Lewis, is one of the prime movers of this project. And he's hearing you speak of the urgency of it and listening to me confirm to you that I would like to see it be done. So you can mark his face, see him right there.
I know him, we studied together.
Thank you, Dashan.
Hello?
All right,
Yeah,
please go ahead with the next. Is that Al? Is that you?
Yes, it is indeed. Yes, it is.
Okay, please.
Governor, I'd just like to refer back to a question Huntley asked earlier. We now know that, particularly this year, the scourge is inflation, and inflation largely imported inflation. When you look at the balance of trade, the CPI, isn't the time now really whereby we should be spurring local producers to manufacture more products, make more food products, energy products? Isn't that really something that should really take place now?
even before this recent bout of inflation, that statement was true. It is even more true now. I am in absolute agreement with you.
Thank you.
Thanks.
Thank you. Al, you wanted to follow up?
No, no.
Okay. All right. Thank you. Huntley, is your hand up?
It is indeed. Governor, I've noticed a trend in just looking at the earnings reports from the listed companies, some of which have financial institutions in their group. There seems to be a reporting of significantly lower income from foreign exchange trading and translation gains, apparently stemming from the relative stability in the FX market and even strengthening of the Jamaican dollar against the US counterpart. Interestingly, some have explained this lower income stream using the term volatility in the foreign exchange market. Does the central bank care to comment on that?
I guess their reference to volatility is that there was lower volatility, which is a positive thing, in my opinion, and outcome that the Bank of Jamaica welcomes. But you know, the amount of foreign exchange that has been traded is not any less. So to the extent that they are trading and making a fee on the trades means that their earnings would not be affected significantly by the rate. But to the extent that they are long in foreign currency and have not reaped devaluation gains, well, you know, too bad. The country's interest comes first, and the country's interest is a stable exchange rate. So I don't have any further comment on that, Huntley.
Thank you, Governor.
Colleagues, we have a few more minutes. The floor remains open. If you have any additional questions, now is the time to get them out.
Hello?
Yes. Who is this? Is this Keith?
Hello?
Yes, Keith, is this you? No?
Hello?
Yes.
Yes, but
Is that Al?
Al wants to go again, so that's fine.
Okay, Al, please go again.
Keith, I'll be brief. Governor, we've seen the decimation in the Bitcoin. We've seen the arguments over these alternative currencies abating, and we're seeing a move to more traditional ways of with currencies. What are you seeing there, say, to the in the midterm now? Do you think people are just really reverting back to business as traditionally we see it?
Al, I don't usually comment on cryptocurrency. As a central banker, I don't really have a interest, so to speak, in cryptocurrency. Personally, too, I don't invest in cryptocurrencies. I don't see cryptocurrencies as a kind of security that, or an asset that, you know, I would recommend. It's too volatile. And the very same downward trend may turn to be the opposite shortly. And I wish them luck with it. But it really has nothing to do with the central bank. And normally I don't want to comment on it.
Okay.
Okay, Keith, your turn.
The first, hi, Governor. The first question is, do you have any sort of target band, say in a percentage way, for volatility, which you just referenced with respect to the exchange rates? You know, there are sort of global benchmarks of what is a volatile currency for, I would say, developed countries more, perhaps. Do you see there as being a difference between, say, the amount of volatility that a UK or US would take in terms of their currency versus a country, emerging markets generally, and Jamaica in particular?
Thank you for that question. Yes, we do have a measure. I would say that we don't strictly follow that measure. In other words, we're not looking back on every day's trade and saying, oops, that's a breach of it, upside or downside. But we have a general idea that guides us. And Dr. Robinson is perhaps better able to speak to it in detail.
Yes. Just to echo what the governor is saying, certainly we know that the Jamaican market and the Jamaican economy can't absorb and manage the sort of volatility that you will see in advanced countries or even in larger emerging market economies. But we do want to ensure that whatever volatility that exists in the market doesn't cause any sort of dislocation, doesn't cause any panic, doesn't cause people to worry about where the exchange rate is going, doesn't impose a significant cost on doing business. So yes, some volatility is good. That's important for encouraging market depth. But what we're more concerned about is the excess volatility. And what we've tried to do over the last year or so is to try and dampen or remove a significant amount of that excess volatility.
Thank you very much. Are there any other questions?
Can I go again? Follow up on.
Please, Keith, go right ahead.
On the issue of, thank you for that response. On the issue of interest rates, and sort of not quite the same question as Huntley's, but are you at all concerned that your recent rises in interest rates have increased is there a point at which you might become concerned that your recent rise in interest rates will increase significantly the cost of funding of the government's debt in particular? Obviously, for example, I believe the 10-year yield on GOJ JMD debt is something like 6%. So that means that the curve supposedly is kind of flat, which is a little surprising to some people. So I guess, supposedly normally if you keep going and if they keep it at 6%, if that's the figure, though that's a bit, then you'd say that the yield curve would start inverting. Now, which is supposedly in the US anyway, a sign of, going into recession. Now, so the quick question is whether there is a point at which you start to become concerned about your raising interest rates in terms of its impact on, say, the government's funding costs. And also, I would say the additional question is that there's been some capital market shortening of time horizons by virtue of the recent rise in interest rates. So the capital markets, for a period which is very unusual for Jamaica, we seem to have the ability, preceding the 29 crisis, we seem to have the ability to borrow relatively long term in Jamaican dollars as corporates. Corporates seem to have that ability, which was unusual. You could make caveats and so on. So do you have any concern about, increasing rising in interest rates having an impact on that, what I would call very nascent JMD dollar corporate bond market, which now seems to be under a little pressure from the sharp rise in interest rate that you've had over the last few years?
Thank you, Keith. When the government made the Bank of Jamaica an independent bank and gave it a primary mandate of targeting inflation, it was serious in doing so, and it would have taken into account that occasions could arise where the pursuit of that mandate by the Bank of Jamaica was of some cost to the government and their objectives. I think that was well thought of in their minds. And it's no different than in the United States, where what the Fed is doing could have the impact on slowing the economy and so forth. So, we can't have our cake and eat it. We say that inflation is terrible for us in the long run, bad for business, bad for growth, bad for stability. So we have to cure it, much like having cancer. You can't have cancer and as well want to live a normal life, don't take chemo, don't take radiation. You just have to make choices. And the choice that we in this country has made is that inflation must be fought and fought vigorously. And once that is tamed, then we can relax and make growth continue. Now on to the question as to whether this is a cost to the government. Yes, it's a cost to the extent that they are currently in the market raising funding. They will find that the cost is significantly higher than, say, 12 months ago, to the extent that they have instruments that are repricing, they are variable rate, and they are repricing quarterly, annually, semi-annually. Yes, they will find that those are more expensive. The fact is that government debt is mostly foreign currency denominated, so that increases in interest rates in Jamaica have no impact on 60% of their debt. Of the remaining 40%, a hunk of that is fixed rate and is unaffected by current movements in the interest rate. So by and large, whilst there is some impact on the government's fiscal accounts, it's not that great. But I come back to the point I made earlier, that the savings they are making in respect of a stable exchange rate, savings in the size of the foreign debt is tremendous. And I look forward to being able to see the positive impact that it will have on the country's debt to GDP ratio. You asked about the corporate bond market. Keith, as soon as we can say this inflation is trending in the right direction, we think it is consistent, we think we can begin to pause, we will do so. And we hope shortly thereafter that the private sector will come back to the market and begin to take instruments of a longer term in Jamaican dollars.
Thank you, Governor. We have time for one or maybe two more questions.
If I may, Noel.
Please, go ahead.
There are a couple of questions that people ask me whilst I am in the public's mind, and I've passed two of them to Wayne. And if you don't mind, I'd like to ask Wayne to read them and to answer them.
Most certainly. Go ahead, Dr. Robinson.
Thank you, Governor. Two concerns have been raised from various segments of the private sector and the public. One in relation to our reserves and the trends in our foreign reserves, and the other in relation to the competitiveness of the exchange rate in the context of the stability of the exchange rate. So we just want to take this opportunity just to briefly address those two concerns, which we think are very important concerns. With respect to our reserves, the view has been expressed that Jamaica has faced a rapid deterioration in our net international reserves since October due to the vigorous intervention by the bank. Now, I want to say upfront that the bank considers maintaining an adequate level of reserves as one of the key pillars of underwriting and ensuring macroeconomic stability. Now, as at the 17th of August, day before yesterday, our net international reserves were approximately 3.7 billion. This is some 6.7% below the level at the beginning of October, when we had to adopt a more stringent policy stance. Of course, the 6.7% is a far cry from the 21% that has been quoted in the newspaper. We believe that it is very important that when the public sees these figures, that they understand what is behind these numbers, so as to avoid an unnecessary alarm. So just want to take just 1 minute just to expand and elaborate what has been behind these figures. Now, first of all, I mean, you should note that Bank of Jamaica sells foreign exchange to the market through our BFixit window. And from time to time, we also sell to the energy sector. Specifically, we sell to Petrojam and JPS. And the reason for this is that these two entities tend to have very lumpy demand. And from time to time, the market isn't able to manage these sort of lumpy demand without causing significant dislocation. We also provide foreign exchange to meet the government's external debt payment and other obligations when needed. But it's also important to note and to advise that the bank every day also buys foreign exchange. We buy foreign exchange from the market via our surrender requirements, which requires that the banks sell 20% of their daily gross purchases to the BOJ, and Cambios are required to sell 15%. Our reserves are also buoyed whenever we receive inflows from the government. So, for example, if the government undertakes an external borrowing, the foreign exchange flow into the bank. So, over the last 10 and a half months, since October to the 17th of August, the bank has sold, through the various mechanisms that I mentioned earlier, close to $1.5 billion, both to the market directly and also to the energy sector. At the same time, however, we purchase approximately 2 billion, as the governor has noted, from the market. So on net, we have bought approximately 500 million. Over this period, the reserves are also buoyed by the proceeds of government external loans, roughly a little bit under 300 million, mainly during the March quarter. But also, we have had to make significant debt service payments on behalf of the government, running close to a little bit over $1 billion. And this largely reflects a very large Eurobond maturity in the March quarter. Now, it's important that when we're looking at the movements in the reserves and what's behind them, it's important that we view them in the context of what is an adequate level. Bearing in mind that during periods of crisis and shocks, such as what we have been experiencing since COVID, the reserves are needed and are used to help to cushion the effects of such shocks. Now, when the bank is considering what is adequate, we have to consider, well, how much foreign exchange would be needed if there's a fallout in our export earnings, such as what happened under COVID when the tourism industry closed. We also have to consider how much foreign exchange would be needed to service the government's external obligations. We also have to make an estimate of how much foreign exchange would be needed if there should be a sudden surge in capital outflows. So when we're deciding what is an adequate level of reserve, the bank uses the IMF's measure of reserve adequacy, which takes into account all of these factors. And you'll realize that it is broader than the commonly used measure of weeks of imports. So when we do our estimate of this measure, which focuses on the gross reserves, not on the net reserves, the gross reserves, which currently stands at $4.3 billion, when we assess how adequate that is, when we look at what the level of adequate reserves, gross reserves that are required, and we compare that to the 4.3 billion, we see that the 4.3 billion is 129% of the level that is considered to be adequate. So we have sufficient, more than sufficient reserves, even at the current level. But more importantly, looking ahead, when we look ahead to see what is happening in the balance of payments, what could happen to the various flows that I mentioned, we still expect that the reserves will remain above the 100% of the adequate level. So the bottom line is that although the reserves have declined, they are still adequate. And we just want to reassure Jamaica that as the guardians of the country's savings, Bank of Jamaica is fully cognizant of the need to maintain an adequate level of gross reserves, given our vulnerability to a myriad of shocks. And we will ensure that the reserves remain adequate. If I could just quickly now go to the other issue about the competitiveness of the exchange rate. I mean, there has been some concerns, particularly among the tourism sector, that the recent stability in the exchange rate could undermine competitiveness and as such could affect their profitability and their, as they compete against other countries. Now, in principle, if inflation exceeds that of our major trading partners, that is, if Jamaica has a higher rate of inflation than what our major trading partners or our major competitors have, the exchange rate will have to depreciate by that difference so as not to hurt the profitability of our domestic exporters. In other words, in order to maintain competitiveness. So routinely, every month, we look at how these two variables are moving. We look at how our trading partners' inflation is moving. We look at how our trading partners' exchange rates are moving and against our own inflation and exchange rate. And based on data up to June, and we're using data up to June because that's when we have full information on all our trading partners, we will see that for the 12-month period leading up to June, although the exchange rate would have stabilized, Jamaica, although the nominal exchange rate, I should say, the nominal exchange rate have stabilized. Jamaica, when you look at the real exchange rate, the movements in the real exchange rate, which is what matters for competitiveness, Jamaica would have gained about 1.3% in competitiveness over the period. If we should look at a more shorter time horizon since October, which is when we adopted a more stronger monetary policy stance, there would have, between October and June, there would have been no change in competitiveness. The real effective exchange rate, the real exchange rate would have been basically flat. Now, one may argue that we need to continuously improve competitiveness, and we agree on that. And as such, you know, the movements in competitiveness has not been a lot or has been slow. But we also must bear in mind that if we look over the past 10 or so years, because of the adjustments that we have had under the economic reform program, we would have gained significant amount of competitiveness in terms of the real effective exchange rate of about 14%. Now, Bank of Jamaica monitors this very closely. That is to the extent to which our policies are affecting the competitiveness of the export sector. And certainly based on the statistics that I just mentioned, it is our view that certainly up to this point, the competitiveness of the external export sector has not been undermined. Now we have to continue to watch this very carefully on a monthly basis. We have to continue to watch this trend to ensure that we are not undermining the competitiveness. But I should add, finally, that maintaining competitiveness is best assured when we have two critical factors. One, when inflation itself is brought down closer and more consistent with the inflation that is in our trading partners. That is the level of inflation that our trading partners are accustomed to. And the bank is committed to that objective. The other factor that underpins the long-term competitiveness of our export sector is productivity, improving productivity. this is also vital for competitiveness. So the bottom line is that we are not seeing any significant fallout in the competitiveness of the exchange rate from the stability, but this is something that we have to continue to watch. This is something that we watch very carefully. I'll stop there, Governor.
Thank you. Thank you very much, Dr. Robinson. You know, the issue that Dr. Robinson mentioned, the two issues, one on the FX adequacy and the competitiveness of the exchange rate, are questions that we get very frequently here at the Bank of Jamaica. And I want to thank Dr. Rob for that very comprehensive response. Thank you. And just so you know, as a student of economics, I was brought back to school with that response. Thank you very much. Very much. A very detailed response. Are there any other questions before we wrap? We'll allow for maybe one more question. Keith? Yes, sir. Please go ahead.
Yes. Can I just ask about, well, a bit more about the concern over capital flight? It seems to me, without having done a lot of work on it, that it looks like as though there's been relatively little capital flight, even when the interest rates were around 0.5%, which was unusual and surprising, you could argue, for many, although maybe it reflected an improvement in confidence. Is there any sort of indicators you are looking at or concerned about? Because despite the shock of COVID, which you would have expected to have, in past times, that would have been the kind of shock that might have encouraged capital flights. It didn't seem as though that really occurred during that period either. So I just wanted to get a better understanding of the Bank of Jamaica's concerns in this area.
I agree with you, Keith, that even when rates were low, we didn't have capital flight. But what we did have, because I think if we define capital flight as money running away from Jamaica, what we did have, however, was money walking to a better investment possibility. And whilst it's not capital flight in the sense that domestic conditions weren't running it away, it still was a drain and some pressure on the exchange rate. And what the new interest rates have done is make people stop and think, maybe there is a investment here in Jamaican dollars that is as good as, or maybe even better than one in a foreign currency. So I take the point, low interest rates doesn't mean that there will be capital flight, but it also means that you run the risk of capital trying to find a better return elsewhere. And so I hope that answers you.
Well, that's helpful. Can I just ask a follow-up to that point, which is that it looks to me as though what you're talking about is the sort of the domestic market and the money moving from J dollar to US dollars in the domestic markets in instruments, and that in the past, because of the market dynamics, that can create some volatility in the exchange rate. My view, though, would be that the Bank of Jamaica has the ability to smooth some of that, particularly if they're confident that it is domestic transactions. That it's not money that is actually being wire transferred abroad to other jurisdictions. I think part of that would have been from people, coming out of US dollar debt financing into Jamaica dollar debt. So, and then the appropriate transaction. So maybe you could just say, is that what you're really talking about there in the example you gave, A? And B, do share my assessment, or do you have better information that there is some level of capital flight, as in money going overseas, that you're concerned about?
I can say clearly that I don't have any capital flight concerns today, meaning that I see evidence of it. But what we have to be careful about is that investment assets abroad or in foreign currency become far more attractive than that in Jamaica. And what will happen is, as you say, people will go to the market with their Jamaican and buy US. That puts pressure on the exchange rate, and they make their investment. So it's not to our interest to encourage that by keeping domestic interest rates very low. So what the Fed does is of some importance to us in maintaining that relativity of our rates and US rates. As
Okay.
Dr. Robinson indicated, he wants to speak on the subject.
Well,
I
okay. Go on, sorry.
Yeah, I think, Keith, it's important to underscore that when we talk about capital flight, we're not necessarily just talking about money moving across borders, but more critically and more generally, just a preference for US dollar investments or foreign currency investments. It doesn't matter where they hold it, whether they hold it in Miami or whether they hold it in a bank or a security dealers in Jamaica. So, and that is the broad context that we're talking about and the broad context that we're using. So if you look at foreign currency deposits in the banking system, in the DTIs, for example, Keith, many years ago, that was just about between 20 to 30% of their total deposit liabilities. Today, that fluctuates between about 40 to 45%. A couple of years ago, it even went as higher than that, closer to 50%. So we have seen a trend increase in this preference, in this dollarization. Admittedly, since this year, it has stabilized given the policy actions that we've taken. I mean, if you look at the securities dealers sector, that dollarization is even higher than what is in the banking system. Now, we spoke earlier about the transmission and the effectiveness of the transmission. The fact, whenever you have a banking system that is so dominated by dollar liabilities, it does affect the transmission because it means that Bank of Jamaica's monetary policy is only operating on a fraction of the liabilities of the banking system. So it is in this context, when we're talking about capital flight, you have to think about it from the broad perspective of this preference for US dollar assets, US dollar or foreign currency investment, whether they hold it here or whether they hold it abroad.
Hello?
Yes, Al, please.
Yes. Governor, I wanted to ask you, I know that remittances are down by about 3% for the half-year period. In your opinion, what's accounting for that, and is it something that you're perhaps a little anxious about?
What I'd say, Al, is that we had expected it to decline even earlier than it has, and even more than it has, because we thought that some of that rise in the remittances had to do with the fact that Jamaicans could not travel to Jamaica themselves, travel restrictions. But now that they are traveling back in droves, we find that remittances, albeit down a bit, are still strong, and in fact stronger than pre-pandemic. The general trend is for it to tend towards declining somewhat, but it doesn't seem as if it is going to be that dramatic. Looking on the US labor market, of which Jamaicans in the diaspora would be a big part of, it's still strong, which means everybody who wants to work can work in the US. It looks like there's some wage pressure on over there too. So I think that the diaspora is, whilst they may not have the benefit of of all of that largesse from the US government, which they experienced in the prior year or two. They will be buoyed by the labor market, which is strong and where wages are rising. So I would be surprised to see remittances go back to 2019 pre-pandemic levels. I think it is going to trail off a bit, but remain above the pre-pandemic. So I'm not terribly concerned about it.
Thank you.
Thank you very much.
Can I have a
Keith,
final
go
follow-up?
ahead, Keith, and this will be the final question. Please, Keith, go
Sure.
right ahead.
I'm interpreting the previous comments, where you started from and the US started from, interest rates were not, you were quite similar to US rates, almost the same. You've gone up 550 basis points. The US has just started its cycle. I can't remember how much they've gone up, but obviously quite a bit less so far than you. Is there a sort of target level of you have gone up, it looks as though if you believe the US figures that they would go up, you would still have gone up a lot more at 550 basis points than they supposedly will go up now. Is there a target level where you think is appropriate in terms of US versus Jamaican policy rates?
What I'd say, Keith, is that the Fed has communicated where they are going for the rest of this year. And we have taken that into account. So when we say that we are at an appropriate level, it means that we have taken into account the fact that they will be increasing. I think they have another 50 and then 225 basis points. So we feel pretty comfortable with that. Now, remember, that is just one of the indicators that we're looking at. We're looking also at commodity prices. We're looking at the impact domestically generated inflation. So we have to take all of that into account in coming to final decision in respect of do we pause or do we not.
Thank you.
Thank you. Thank you all. Thank you all. Before we close, just want to share a little bit of fun facts with you. Today marks 3 years since Governor Biles took over as governor of the Bank of Jamaica. Can you believe it? And Governor Biles is looking 3 years younger than he did 3 years ago. Governor Biles, I want to know the secret. It must be the barber. I want to thank you all, everyone representing the different media houses, stakeholder interest groups. Thank you so much for joining us. This press conference would not be possible without the input from so many folks. REPD being led by Robert Stennett and, of course, Dr. Rob, who oversees. We want to thank the communications team led by Dwayne Extall, who has managed to get this up and running, and all those who have assisted us in putting the function here today and to make it possible. I want to wish you all the very best. May God continue to bless us all, and please have a wonderful weekend. Take care all. Bye-bye.